What is the worst kept secret about a reverse mortgage that most seniors don't know about? I'm Janet Lambert, the Dallas Real Estate Wrangler. Let's get moving and find out what it is. I think the worst kept secret about a reverse mortgage that no one knows about is that you can actually use it to buy a house. You don't have to stay in your existing home to get a reverse mortgage. And I think the ideal client for this or customer would be who doesn't like their big old house with equity in it. They may not like the neighborhood they're living in or the city. It may not be close to friends or family. Heck, they might want to move to the beach. They deserve it. I recently found out about this program myself after reading a book called Understanding Reverse by Dan Holtquist. But it wasn't until about 1987 when President Ronald Reagan got Congress involved in putting the Federal Housing Administration, or FHA, in charge of regulating and insuring this loan in order to protect both the lender and the homeowner. This is an FHA-backed loan, and there is mortgage insurance associated with it. And let me start off by saying this loan is definitely not for everyone, but it should be a tool that seniors with a lot of equity in their home or seniors that have sold their home and don't know where they can put all their cash into a new home should look at. First of all, a buyer must be 62 years old to qualify for the loan. The older you are, the more money you get. Look, these folks have done all the actuarials and the numbers. They know about how long we're all going to live. On average, you can borrow anywhere from about 40 to 60%, depending on your age and what's known, and then they factor in what's called the expected interest rates. And that gives you your PLF, or your principal loan factor. Now, you do own your home, and you can pay off the debt at any time. But this isn't a loan that you should go into thinking that you're going to have a lot of equity at the end. And that is not the point of this type of loan. This should really be considered your last home before you have to move to the nursing home or you start pushing up daisies. One of the two. Now, the funds you receive through the reverse mortgage are not considered income and they are not taxable. This is also what's called a non-recourse loan, meaning the homeowner is not responsible for mortgage debt that accrues beyond what the home is worth. The home stands for the debt, not the homeowner. So what types of properties are eligible under this loan? Well, you can buy a house, a townhome, an FHA-insured condominium, anywhere from 2 to 4 units like a duplex or a quadplex. You can even have rental income coming in, or a modular home if it is attached to a slab. Properties that won't work would be investment properties, second homes, mobile homes, or farms and ranches. A good candidate scenario for this loan would be someone that actually I worked with a couple of years ago. This was a couple in their 70s that was retired. They lived in a old townhome down in Dallas, 2-story. Their kids and grandkids moved up to a new master plan community in Denton, Union Park, which I have done a video on. So if you're interested in Union Park, please catch my video. Union Park also has a Del Webb community inside the master plan community. And they had to use all of the cash from their proceeds, scrimp and save, and put every dime into that new house up in Union Park. So let's say they use the reverse mortgage for this purchase. Okay, and to make it easy, let's just say they netted $400,000 off the sale of their townhome, and their new house in Union Park also cost $400,000. So using 40% as a conservative number for the loan they could get. If they were in their 70s, it would probably be more like 47%. But 40% of $400,000 is $160,000. So they would be able to receive a reverse mortgage for $160,000. That would leave them needing $240,000 cash needed to close. And that would leave them then another $160,000 cash from the sale of their home, now that they could just put in their pocket, their own bank account, and use it for whatever they want. Maybe they want to start traveling, or go around and see all the national parks of the U.S. I know that's on my bucket list. Nevertheless, they could use this money for however they want. There are two different types of loans you can get here with the reverse mortgage. You can get an adjustable rate or a fixed rate. Everyone seems to think fixed rates are better. The information I've read, an adjustable rate may be a better mortgage here because it allows for tenured payments. Tenured, folks, means forever, as long as you live in that home. And or you can have a line of credit to pull off of, and of course it wouldn't affect your balance until you used it. Also become familiar with the reverse mortgage calculator. I looked around online for a long time before I found one I really like, and it lets you put in a lot of different numbers and scenarios. You can figure out your interest rate. You can change the home appreciation rates, which are really important. Because appreciation in the past 10 years, we've seen it go in the Dallas-Plano area anywhere from 3% to 33%. So please use conservative numbers. And if you are interested in the reverse mortgage calculator that I like, please request it via the link below, and I'll be happy to get that out to you. So, seniors, I want you to become informed and educated, and I hope this video has done just that. So get a book, start getting some more information on it if you are interested in possibly using a reverse mortgage. Talk to a reverse mortgage lender, perhaps an elder care attorney or your financial planner. And please, if you're in the Dallas area, use me as a resource. Of course, if you're moving to or from Big D, talk to me.